So today is Sunday, April 21st. I am officially back from my week vacation last week, so I want to start making some more videos. I got back in time where I was actually able to trade Friday the 19th, and I want to go over a few trades that I made. Just happened to be a really good day where things worked out really, really well. So the first trade I took was WISA, a listed first green day. Before I go into that trade, I just want to review my Friday watch list because I think this is very important. So I said I'm back from vacation. Obviously, the market is not super strong. If we go into the SPY, let me just, is that not going to work? No, well, let me just throw some moving averages on just so we can see what's going on. For me, I really use this blue and orange line is the key for me, the 10 and 20-day moving average. Once we start to crack and get below those levels, I am a little less aggressive in the market. I start to get a little more cautious. I, in a sense, distance myself from the market while still being completely, engulfed in it. But my mind's there, but my trading kind of takes a backseat, especially now that we're below the 50-day moving average as well. We haven't seen that in a while now, ever since the big run off the lows last, October, November. So I think it's very important to always, always, always be looking at the big picture. The big picture influences my trading day in and day out. It's not, without seeing the big picture, how could you trade on a smaller time frame? So just that being said, this big picture is a lot weaker. So I created some rules to keep me safe, especially coming back from a vacation and taking a week off. You lose a little bit of a market sense. Now, of course, I was on my phone looking at the SPY, looking at some runners, but it's different, being on your phone than going out all day in a completely different time zone compared to, sitting here Eastern time looking at the markets tick by tick, day by day for hours and really getting the true feel of everything. So that being said, some things I want to do is just downsize my risk, which is just downsizing, trading less size. I wanted to reduce my dollar risk per trade just until I found some consistency and get the feel for the market back, which I always think is smart. It's never a bad thing to downsize and look for consistency. The second thing I said was I want to trade less, do less, distance from markets intelligently. So what do I mean by that? I mean that I always find that less is more. Doing less in trading always gives me more. So what I want to do is I want to still have of course, something I'll always have, my market obsession, while not using that obsession as fulfillment for me. So I thought about this a lot actually over this weekend, where I look at a lot of athletes, some great people, athletes such as, Kobe Bryant, the Michael Jordans, the Tiger Woods, that are so obsessed with their craft. And sometimes I've seen that it could consume people. And I've been there where I'm so obsessed with trading that it just consumes me. I forget about other relationships I have, neglect my friends, neglect my family, neglect people that I care about. And I think that's the wrong way to go about it. I believe, yes, you should have an obsession, but it should be a healthy obsession. Don't turn an obsession into an unhealthy one. The way to do that is to find a balance. So like I said, I'm obsessed with the markets, but it's not an all-consuming obsession. And that's what distance from the markets intelligently means. Keep that obsession, keep the drive, keep the fire burning to get better and learn and strive for greatness every day, but don't let it affect your emotions on a day-to-day basis when it comes to, interacting with your family, interacting with friends, interacting with others. Don't turn into a hermit and hide under a rock, which is what I've done many, many, many times. I'm maturing as a trader and learning that, trading is just a means to an end. I love it. I'll do it forever. I want to be the best, and I'll try my best every single day. But if I fall short, or, if something's not going right, I'm not going to dig in my heels and fight. I must do this, I must do that. No, going to relax. I'm going to find fulfillment in other areas of life. But yeah, before I go off any further on a tangent, yes, just do less. Do less, focus on less, and it'll work out better. So that being said, I focus on 3 tickers per day until my consistency and the feel of my market feel are back. So I found that focusing on 3 tickers per day for me that's just about all I need. I know there's guys out there like Nate from Investors Underground that could trade, tons of tickers, these systematic shorts that I see post screenshots trading 10, 12, 15 tickers a day. God bless them. That's the way they could do it. Their minds are great for that, but mine is just not. I do better focusing on less. Once I start getting over 5 tickers, that is when I really, become a deer in headlights. I can't focus on certain things. I misname. So 3 for me is great. Not only does 3 tickers help me do less, but in my opinion, it helps me make more. How? By focusing on 3 tickers, I could really execute to the best of my ability and scale intelligently when things truly are working in my favor. But also, let's say I lose on all 3 tickers, boom, that's it. I'm done for the day. There's no, let's go trade this one. Let's go trade that one. It keeps me focused and it keeps my drawdowns to a certain number. So let's say I go and end up risking 1,000 per trade. My max drawdown's $3,000 on the day. It can't get any worse. There's no room for ruin. Of course, those days where I really go on tilt, but I always have my emotional checks in place throughout the day. But it really keeps me safer and helps me lose less. It really puts that max limit on a day, which is what I really, really like. And it helps me, make more as I really execute better. So that being said, I did these 3 things going into Friday. And the first trade I had was on WISA. It was a listed first green day. I said it's worth it because it was a huge multi-day runner with big volume, big liquidity. And the idea was just a classic listed first green day setup. Wait for my triggers and execute if it sets up. So if we go into the chart, daily chart, big runner, ran hundreds of percent, came down. Probably would have been interested in a short this day because it was just a massive day 2 capture, but that's, whatever. Came down, had the 1 red day, and then all I'm looking for is that trend change. And to me, I was buying a little early in here because I saw a big bid propping it at 550, I think it was. So I was like, I could take some in the 580s. If it gets back down there, I could cut it. And then if it works, I could scale. So it came down and I actually did cut it right into here for a small loss. I think I lost like maybe between, I don't know, $200-300. But then I saw it crack 565. I was like, this might just fade off now. But this big perk here on volume immediately said to me, okay, we're back in play. We're holding the previous day lows. We're now holding VWAP. We have the potential to go green. If we go green, we're most likely breaking that high of day, which for me, one after the other, those are all my triggers. And if volume sustains and churns, even better. So we started holding up. Volume was sustaining, coming in. I was buying here 580s, 585, buying when it went green, added when we broke through the high of day. And at this point, I was saying, okay, 565 is my risk because look at all this volume that just came in. We get back there. All those buyers are going to head straight to the exit and just be selling volume straight down through low of day and even lower. And my whole goal was to sell into parabolics, try and be patient. I think I had 2,500 shares. Yeah, 2,500 shares. So not massively sized, 2,500 shares from like a 590 average or like a 587. So like I said, just trading smaller size, being safe as I'm coming back. I would have loved to have 3, 4, even 5,000 shares. That would have been really nice, but I wanted, like I said, to start smaller coming back from my trip, and the goal was to sell in the parabolic. So it started spiking, and I was selling, I think, right away in like the 640s. I sold a piece, 650s, 670s, 680s, and then I waited a second. I said, okay, can we break through 7? Boom, broke through 7, sold the rest right there. Big volume came in. I thought, okay, that might be topping volume. We did just run, $1.50. The worst thing I did was I should have held just a small piece, 500 shares, because there's always potential for it to go further, as we see for the rest of the day. It did end up going a little higher in the morning. And I would have been all out here. I would have never made it to the afternoon. Let's just be honest. Hindsight's 2020, but I would have never made it there. I would have been selling probably after this hard crack right here. I would have said, okay, I'm all out in the 540, 740, 750, 760s. But, I did capture a good solid gain. This is how listed first green days, no, I don't want to say should work, but normally should work when they want to work, if that makes sense. They should break the highs, good risk reward, over VWAP, green, spiking, volume building, volume churning, and some nice strong moves. Now, let me go into the opposite before I go into YYAI. Let's go into INVO, and let me show you one that I played that did not work, and we'll look at all the things that made it not work. So the pattern was a listed first green day. I said it's worth it because it's a big runner, still was holding on to enough volume. Classic listed first green day, but the key here was we need to see volume. So if we go in here, INVO, we go to the daily chart, big runner. It was the gap, one of those gapper and fader ones, which sometimes those listed first green days are good. Sometimes they're not. Sometimes you got to be more patient than you think. But to me, it was a big runner, huge volume, held enough volume on this red day. So I was going for it for a listed first green day. Also super low risk, very tight risk reward. So in the morning, the first negative is we're so far off a red. But we were holding the previous day lows. We started to reclaim VWAP here. It started breaking through the highs. I was a buyer at 138. I think I got 10,000 shares, just about. And it tried to work, but I can't go back and show you the tape there. If you have an on-demand thing on Thinkorswim or something like that, definitely go back and watch it. But the tape was thin. The spreads were wider for such a small price stock. And look at the volume. We broke. Yeah, we got some volume coming, but 20,000 shares of volume, and then we faded right off. That's ugly. I want to see 20,000, then 30, then 50, then 100. I want to see a build. When we get no volume, what do you think is going to happen? We're going to go sideways, and we're probably going to die. Yeah, it could re-break, but I was selling all out right here. I said, you know what? This isn't worth holding. I would rather see it hold over 138, hold over the morning highs of 140, consolidate all day, and then retry with a tighter risk reward and proving that bidders are there and buyers are there. But no, it faded off, proved there's no bidders, tried to come back. I think I tried it one more time, like right in here, saying, okay, maybe this is the time the volume is going to push in. But again, no volume, died off, and I was just selling. I think I lost $300-400 total on this ticker. Kept it small, kept it safe, but let's just notice a few things. Having trouble at VWAP all day compared to, let's go side by side here. Yeah, so INVO struggling around VWAP all day. WISA over VWAP, no problem holding it. INVO red on the day. WISA green on the day. INVO low volume that faded. Look at it, downtrending volume. WISA volume that, increased over time. That's what you want to see. Those are the differences. But sometimes, if I zoom in like this and like this, you never really know which one's going to work. Trading is all about taking calculated risk based off of risk reward. So INVO could have started building, you never know, broke out and started building volume all in here and going green. But, when it doesn't work, I just want to show you why I cut things so quickly, quicker than most. I think when I get into a play, especially a listed first green day play, it should work more quickly and without question in the time frame you're looking for. For this play, it usually happens before noon. And if it doesn't, you normally see it, like I said, hold up, consolidate, and work out in the afternoon. But yeah, those are the differences between these. But then going into our last play, which, I did decent on, but definitely should have got a lot more, was YYAI. YYAI, which was a backside bounce short, I call it. And this is basically a pattern that goes on a big run, has the big crash, but then bounces, not reclaiming the daily chart highs and looking for a swing short type of fade idea. I said it's worth it because it's the biggest runner. It's like a Tim Sykes number 6 short pattern. And the ticker was CNXA, and then it switched ticker names. So this was the ticker, went on a big run. And then it switched to YYAI, which continued that run from the 150s all the way to 265, had a big drop day, green day, inside consolidation day, and then boom, big red day. To me, so the reason why I didn't play this as well as I should have is because the chart had a ticker change. And for me, that's always weird. The volume profile changed a little bit. I felt a little uncomfortable, so I just took what I could get. I shorted it in the morning here, added a little here, had 2,000 shares from the 220s, and I was covering right away into the 190 drop. I said, you know what, this is good. If it consolidates all day, I'll reshort it the next day and really keep shorting it and hitting it on the backside. But then we had a big drop, and I said, oh, I'm an idiot. And then I looked later, oh my God, it really collapsed. But it is what it is. That's trading. Nothing really else I could say other than similar idea to WISA. Just hold a piece. Hold a piece, like I said, when I was going over this, a swing idea, backside bounce shorts, a kind of short intraday, cover a piece, swing a piece. I didn't swing a piece because I was being a baby and didn't get my full size. I wanted about 4,000 shares. So I was like, I'm just going to cover, take my gains, move on. I do that all the time when I don't get my full size, which it is what it is, but I definitely need to hold a piece, even if it was 500 shares. Just hold a small piece. Normally goes a long way on really nice charts and really nice setups. Something like YYAI. And now I guess it's a potential list at first screen. This is just a weird one, how much it faded. I don't know. I'll go over that later in my watch list, but yeah, that's really that. So WISA, INVO, and YYAI. YYAI locked in, I think 600. Yeah, like 575, 600. INVO lost like 3, 4. And then WISA, WISA locked in like 18, 1900, something around there. So like a $21 to $2,200 Friday coming back from vacation, which was very nice. But now I'm ready to get back into gear, be firing on all cylinders, really get in tune with the market again, push it when it's time to push it, but take a step back when it's time to relax, do less, don't be overly aggressive, don't be overly consumed with the market, just have a really good balanced mindset with everything, and really just find your balance, find your happiness in life, and everything else, you follow your patterns and your process and be happy in life, and everything just falls into place. Don't stress, just take it day by day, one day at a time, one trade at a time, and that's it.